What is up, guys? Welcome to Technical Thursdays, a new series we're going to be making every Thursday, talking about a particular technical indicator. We'll go more in depth, talk about it, how I use it, strategy using it, and how it is actually plotted on your chart. And hopefully, it gives you a little bit of edge in the market. So let's get to it. Welcome back, guys. Before we get started and jump right in, just want to remind you to hit the like button and smash the subscribe and bell notification so you get be notified whenever we release new videos. Also, we go live on Fridays. I trade live every Friday. If you want to come and join, just good hangs, and I explain my thought process, pre-market plan, and I screen share my trades live every Friday. Also on Sunday, we get together and talk about the stocks on the watch list for the week. On our Sunday stock study, we go live at about 8 o'clock, 7 o'clock market time every Sunday. So today we're going to be talking about exponential moving averages, or EMAs for short. So what an EMA is the price of a period of candles plotted as a line, giving a little bit more weight to the recent price action that has taken place. The way that I use EMAs is basically as a trend indicator or a direction indicator, just helping me to be able to stay in a trade. Once I'm already in a trade, it helps me show the strength and sentiment of the price action that is going on. So that is the way that I use the EMAs personally. And there's really good reason why I pick the inputs that I do for my EMAs. So for instance, this white dotted line is the 8 EMA. This measures and averages out the last 8 candles. This one is the 13. It measures and averages the close of the last 13 candles. The purple here measures out the last 21. This is the 21 EMA. The orangish yellowish one here is the 55. And this is your big slow one where it's telling you overall sentiment is bullish or bearish. So you don't want to be longing anything below this line, and you don't want to be shorting anything above this line because it's showing strength or weakness for that type of trade. So just to get into a little bit of strategy and the way that I use it, this is called a crossover strategy for EMAs. So the reason why I chose those inputs for my EMAs is because they're based on Fibonacci numbers. So whenever they retrace and they hold, they could be used as resistance whenever the price action retraces, kind of like it does here. If you don't know too much about Fibonacci's, come back next Thursday. I'm going to make a video about Fibonacci's next Thursday and explain how Fibonacci works. It affects trading in your life. It affects all kinds of crazy things in nature. It's actually really quite interesting. So come back next week to see that video. And yeah, so that is why I use it, is they're based off of Fibonacci numbers, so I can use them as retracements. So just to show you what I mean a little bit. So this is a pretty good trend to the upside right here, right? So this is a really nice trend. You can see it breaks up above the price action is above all the lines here, right? It spikes here, it comes back and holds my 13 EMA. It spikes, it comes back and holds, and then it spikes, and then it eventually does break the trend and come down. So if you're in this trade as this is moving up, you can use these as your add points. So your add points to your trade. So then you're not trying to buy breakouts and getting screwed out whenever you're trying to buy. Now, as far as the strategy, right? So this is called a EMA crossover strategy. This is one of the very first strategies I learned in trading, and it's as long as you're disciplined, this is quite a profitable strategy if you do keep discipline with it. So the way this works is that the 8 EMA is your trigger line. So the 8 EMA is going to act as your trigger line, and once the price action moves and starts crossing above with the 8 EMA and the trigger line over the other EMAs, which are slower, the 13, 21, and 55, that's where you're going to buy into the trade. So in this instance, the SPY opened up, dipped down, and then once it found a little bit of support here, it came back up, and it started breaking above the 13 started breaking above the 21 here. The 8 and 13 start breaking above the 21. Then this is where you would actually buy into the trade. So then you would just stay in the trade, and you're able to visually see that the trend is really nicely intact until you start getting a breakdown right here where the 8 EMA starts breaking below the 13 and 21 EMA as well. So if you're buying on the cross down here at 323.30, 332.30, excuse me, and then getting out at 332.62, so that's about 30 cents that you made, but that's a pretty good trade, right? And so yeah, and then you would just do the same thing here to waiting. This is a little bit nicer trend here. And so once the price action and the trigger line starts moving above the other EMA lines, the slower EMA lines, this is where you would buy, and then you just stay in the trade. As long as the price action is above your trigger line, that's where you stay. Then, since these are based on Fibonacci's, it comes back, retraces, it holds your EMA line. This is where you could add to your position. It'll spike up, it'll come back and hold, and then it just keeps on going. So there's very good reason on why I chose these EMA lines. They are based on Fibonacci's. It works very, very well for trend direction, for sentiment, and also for strength of a trend. So if we look at this for the inverse, right? So you could also use this if you're a short seller. So let me bring it up here. So if you're a short seller, and whenever the 8 EMA breaks to the downside and breaks below the 13 and 21, this is where you can buy into your position at 332.79, and then it'll dip down, it comes back, it retraces to your EMA, it dips down, right? It retraces, dips down, retraces, and this is where you could add to your positions, and you know that the strength of the trend to the downside is very strong. And then once it starts looking like it's going to cross above the other way, and the trend is broken, you could get out of your trade then at that point. The way that you would put your EMAs in here on Thinkorswim is I usually type in just MOV A, and then you'll have a bunch of different moving averages here, right? And so you double tap on moving average exponential, you come in here, and then you just press the little gear cog, and you'll be able to change where the length of the input that you want to have. So the length of the input is how many candles back previous that you're measuring. So right here, this would you could change this to 8, for instance. And then the input here on the top is the close. So this is going to be where it's measuring the price of where the candle closed. So you could get a little bit more exotic with it, where it'll take the high and the low and then divide it by 2, and it averages out. So you could make it where it smooths it out, and smooths it out a lot more nicely. And then this just kind of makes it really nice here, where you could make it like a dashed line, and then you could choose the color. You can also make it to where it's a really thick line, so you're able to see it a lot better. So if you were to want a really thick line, you could put it on. So that's about it for exponential moving averages, guys. So just remember, it's just price action that's plotted as a line, and it gives a little bit more weight to the recent price action. You could choose how quickly you want it to react to the price action by making it a short time span, such as like my 8 EMA, or you can make not as sensitive to the price action like my 55 EMA. So very nice strategy with the crossover strategy. You can implement it into any other technical indicators that you also have going on your chart. Very beginner friendly if you want to take advantage of it as well. But that's about it, guys. Make sure you click the like, subscribe, and hit the bell button for notifications. We'll see you guys in the next Technical Thursday video. Later. My